Hey, what's up everyone? It's Kris McCullough, your go-to mortgage pro and retired Marine. Thanks for tuning in. Today we're diving deep into one of the most puzzling aspects of the current real estate market. We're going to tackle the big question. If mortgage demand is plunging, why aren't home prices coming down? Mortgage applications are hitting lows we haven't seen in nearly 3 decades. Interest rates have climbed back up, making affordability a real challenge. Logically, you'd expect this drop in demand to send prices tumbling. But what are we actually seeing? Prices are holding strong. I want to strip away the noise and give you the straight facts on what's really propping up these home values. We've got a lot to cover, so let's get into it. Alright, let's kick things off with the biggest factor: inventory. We are facing a housing shortage that is critical. If there's hardly anything available to buy, the few homes that are on the market will still command strong prices. Think about it from a basic economic standpoint. When supply is drastically constrained, even reduced demand can outstrip what's available. We've been underbuilding homes in this country for over a decade. Many current homeowners are sitting on incredibly low mortgage rates. They look at today's rates and think, why would I move if my housing payment doubles? This reluctance to sell significantly constricts the supply of resale homes. Even if fewer people are applying for mortgages, even fewer people are putting their homes up for sale. This creates a situation where the active buyers are competing for a smaller selection of properties. If you look at months of supply, we are still well below a balanced market. This scarcity means that sellers who do list their homes can still attract motivated buyers. When buyers see very few options, there's a sense of urgency for the good listings that do appear. Entry-level homes often see the tightest supply because demand from first-time home buyers remains persistent. So when you ask why prices aren't dropping, the first answer is that there simply aren't enough homes for sale. Until we see a significant increase in the number of homes available, it's unlikely we'll witness a dramatic price collapse. Now, let's pivot to the sellers. The second major reason home prices aren't crashing is that sellers are not in a position where they have to sell at a steep discount. Most homeowners who bought or refinanced in the last decade are sitting on a mountain of home equity. This means they have a substantial financial cushion. If they don't get the price they want, many can simply choose to stay put. This strong equity position gives sellers immense leverage. They're not typically forced to accept lowball offers. Instead, they can afford to be patient. This further constrains supply. Selling a home is a big decision, often one of the largest financial transactions in a person's life. If a seller isn't feeling pressured by job loss or other life crises, they're less likely to slash their price dramatically. The carrying costs for many homeowners are still relatively low thanks to those sub-4% mortgage rates. Their monthly payments are manageable, so the financial pain of not selling isn't as acute. We're also not seeing a wave of job losses that would typically force people to sell. This lack of seller desperation means that price adjustments are happening more slowly and less dramatically. Ultimately, the financial health of current homeowners is a key pillar supporting today's home prices. Chapter 3: The Construction Conundrum. Builders can't build fast enough. Let's talk about new construction, another critical piece of the supply puzzle. Builders are facing significant challenges that prevent them from quickly increasing the housing supply. Following the 2008 crash, many builders went out of business, and the pace of new construction slowed dramatically. There's a cumulative deficit of millions of homes. One of the biggest hurdles for builders right now is the cost and availability of skilled labor. The construction industry has been dealing with a shortage of essential tradespeople for years. This shortage drives up labor costs and can lead to delays. Then there are material costs. While some material prices have come down, many remain elevated due to ongoing supply chain issues. Land is another major factor. In many desirable areas, developable land is scarce and expensive. Zoning regulations and land use policies can also create significant barriers. Builders also have to manage their own financial risks. They borrow money to fund projects, and with higher interest rates, their financing costs have increased. Even when builders are actively constructing, the timeline from breaking ground to handing over the keys can be many months. The home building industry simply cannot build fast enough to create a housing surplus that would lead to a significant drop in prices. The wildcard cash buyers and investors are still in the game. Let's talk about cash buyers and investors. While rising interest rates have sidelined many traditional buyers, cash buyers are less sensitive to mortgage rate fluctuations. their presence in the market still provides a floor for demand. Cash buyers can include retirees, individuals with significant savings, or institutional investors. In a market where mortgage-backed offers might come with contingencies, a cash offer is often king. Sellers tend to prefer cash offers because they are perceived as more certain and can close faster. Investors often have a longer-term horizon. They might see the current environment as an opportunity to acquire assets that will appreciate over time. If an investor is buying a property to rent out, their calculation is based on potential rental income versus operating costs. This continued interest from cash buyers and investors helps to absorb some of the available inventory. If these buyers weren't in the market, we would likely see inventory pile up faster. In some higher-cost markets, the proportion of cash transactions can be significantly higher. These segments of the market may be less impacted by mortgage rate hikes. The presence of cash buyers and investors provides an alternative source of demand. They are quietly making deals and acquiring properties. Their activity helps to explain why home prices haven't followed mortgage applications all the way down. Chapter 5. The slow descent. Home prices fall slowly, if at all. Home prices, especially on the way down, tend to be sticky. Unlike the stock market, real estate prices typically adjust much more slowly. Real estate is an illiquid asset. The selling process involves listing, marketing, showing, negotiating, inspections, appraisals, and closing. This entire process can take weeks, often months. There's a strong psychological component. For most people, their home is not just an investment, it's their home. Sellers are often reluctant to lower their asking price significantly. This loss aversion contributes to price stickiness. It takes time for data on comparable sales to filter through the market. The cost of selling a home means that sellers need to achieve a certain price to break even. Historically, even in significant housing downturns, price declines have typically occurred over years, not months. The structure of the mortgage market also plays a role. With the prevalence of fixed-rate mortgages, most homeowners have stable, predictable housing payments. This prevents the kind of forced selling that can happen with adjustable-rate mortgages. The natural tendency of home prices is to adjust downwards in a more measured, gradual way. Your next move navigating this complex market. If you're waiting for a significant market crash before you buy a home, you might be waiting a very long time. Prices may level out or see modest dips, but a widespread collapse isn't in the cards right now. If you're thinking about selling your home and you price it realistically, you've still got a solid shot. There's less competition for sellers on the market right now. If you're a buyer worried about higher interest rates, remember, you marry the house, but you date the rate. Focus on finding the right property for you and your family. If you're feeling stuck in this market, let's talk. I'm here to help you build a clear, actionable plan tailored to your goals. Hit that like button, subscribe, and drop a comment below if you've got questions or want to schedule a one-on-one call.